all of the yield generated by the reserves backing the stable coins goes to the issuers. So we wanted to think about a liquid yield token, which the yield is passed along to the token holders instead of going entirely to the issuer.
Hello, innovators, entrepreneurs, and risk takers. Welcome to another episode of Web3 with Sam Kamani podcast. And today, on this podcast episode, we are going to be talking about everything that is going on in the world of stablecoins. And to talk about stablecoins, I have invited Mitchell from Sierra Protocol, where they are bringing out a yield generating token. They are working in the whole stablecoin space. So let's get into this conversation and talk more about what's going on in the world of stablecoins and how it is changing and where it is going to go, as well as all the new innovation happening in DeFi and stablecoins. So let's get into this conversation. But before we talk more about stablecoins, I want to say that nothing that we talk about here should be taken as investment advice. And as always, please like, subscribe, and follow. With all that out of the way, let's get into it. So, Mitchell, welcome to the show. It's great to have you here and looking forward to interviewing you and talking about Sierra Protocol and everything you're building there. However, my first question is around how did you get involved in all things Web3 and blockchain and crypto?
Awesome. Yeah. Thanks for having me, Sam. Really excited to be on the show. Back in 2017 or so, I got in as more of just a retail investor. I was studying my master's in economics at the time, went on to become an economist at the Bank of Canada and was there for a few years, and then went fully into the industry in 2021 at Woo, which is a pretty large global crypto exchange. Worked there for a few years and then left at the end of last year and began working on Sierra.
Yep, awesome. And what problem in like the DeFi world or in the crypto world you saw that inspired you to create Sierra?
Yeah, I think it's the exciting growth around stablecoins and just how much the total amount of supply has grown over the last couple of years. I think we're almost at $250 billion now. And the big problem really is that all of the yield generated by the reserves backing the stablecoins goes to the issuers. So in the case of Tether or Circle, the issuers get all of the revenue as profit. And we wanted to think about a liquid yield token as one in which it's backed by stable coins, which are earning yield, but the yield is passed along to the token holders instead of going entirely to the issuer. And that's a trend in the industry we've seen a lot more recently
Yes.
with Athena's USDE, Maple's Finance's Syrup USDC, and some other exciting projects in the space.
Yes, absolutely. And some of those projects I have interviewed here as well. So I have like lots of questions. Like for someone who is not that aware listening here and not that aware of how does a say liquid yield token work or how does the whole Sierra protocol work, how would you explain it in a really easy, non-technical way of like where does the yield come from or how does it all work?
Sure, yeah. So in general, stable coins are tokens issued on blockchains where the reserves are held in highly liquid or safe investments like US treasuries and bank deposits. But
Yes.
as I mentioned, all of the reserve or all of the yield from the reserves goes back to the issuer. So to
Mm.
Tether or to Circle. The next iteration I think of as liquid yield tokens, or some call them yield bearing stable coins. Those types of projects, like I mentioned, Athena, Maple Finance's Syrup USDC, and others, they generate yield in some capacity, which we can talk a lot more about the different ways yield's generated, but they generate yield with the reserves, and then they pass along a portion of the yield to the end holder. So, for example, if you stake Athena's USDE token, you get the SUSDE token, which earns yield on a weekly basis. And then with Sierra specifically, we take a similar approach as other liquid yield
Mhm.
tokens, but our main differentiator is that we have a reserve management strategy that is set by the protocol, and it dictates the different yield sources that Sierra can allocate to. So in the case of Athena, it only does basis which we could talk probably for a whole podcast about, but at a high level, it's yields generated by the demand for speculation. So people want to go long the Aster or maybe Bitcoin perpetual futures. That has a funding cost. And then the projects like Athena, like Resolve and others,
Yeah.
they collect that funding cost, which is what's called the basis. And that is yield that they earn through kind of a market neutral strategy. So
Yeah.
instead of speculating on it going up, they're providing liquidity to the speculators and they buy the spot token or the underlying token
Yes.
to ensure they're not exposed to market risk. And then all of the funding payments that they receive goes to the token holders. In the case of Maple, they do over collateralized lending. So they take the reserves out and they lend it to institutional borrowers, market makers, hedge funds, and they have Bitcoin and other assets as collateral. Maybe I'll let you kind of ask follow-up questions, but we take a much more diversified approach to the different sources of yield that we use.
Yep. I have so many questions. I'm like figuring out where to tackle this with. For someone who's not aware, it's like for something like USDT or Tether, their
Yep.
profit margins are 99%. So, someone might see it as, oh, wow, Tether is doing so well. Or I also see it on the other side as that means there are massive inefficiencies in the market when a company can take 99% profits. That is either they have a monopoly or the users are not that educated that they haven't found other alternatives that are better priced or provide a better experience or better pricing or however that might look. So I know that there are lots and lots of inefficiencies in the whole ecosystem. However, I feel that as we start to explore new strategies to create yield or redistribute these profits back with the users or even increase the yield, do you think the risk is also increasing with some of the stable coins? Or do you feel, or where do you see the industry going?
Yeah, I think in general, there's a spectrum of risk and different yield generating strategies have different risk profiles. So something like over collateralized lending is on a term basis, for example. So basically what that means is that you lend it out for say 14 days or 30 days, and then you can maybe recall the assets in the meantime. But generally speaking, your assets are deployed with borrowers and earning yield. And so one risk you could say is liquidity risk. There's also credit risk in the sense of the quality of the collateral you take, or maybe they don't take collateral at all. Even in the case of Athena, as you saw when Bybit got hacked last year, or actually
Yeah.
I think it was early this year.
Early.
Yeah, it's crazy how much time flies.
Yeah.
So when they were hacked, Athena had some profits and funds on Bybit that haven't settled into their custodial model since they use what's called a tri-party custodial model. But there's even credit risk to the exchanges with some of these protocols. There's also smart contract risk. So
Yes.
some other liquid yield tokens generate yield through more niche or smaller DeFi protocols. Some of them even use leverage. So there's even Oracle risk. I would say in general, as the yield increases, ignoring incentives, the risk also increases commensurately. But there's different types of risk for different yield sources. Not all yield is generated equally. And I think the key from Sierra's point of view is to have a really robust risk management framework, which analyzes each yield source. It updates in response to changing market conditions or new developments.
Yes.
And I think in general, you want to look at a holistic set of risks per yield source. And as an end holder, know what risks you're exposed to. How is the yield being generated? And for each type of way the yield is generated, what type of risk am I accepting in exchange for that yield? And in general, the last thing I would just say is there should be a notion of a risk adjusted yield, meaning it's not just about the highest number. I know, Sam, you and I were both around during Luna.
It's
15%
exactly like,
sounded great, but then when Anchor blows it up, 0% or losing your entire principal is really
yes.
horrible. So it's not just about the raw yield, it's also about the risk adjusted yield and thinking about all the different risks that could happen.
Yeah, absolutely. And what would be interesting to see, even for the stablecoin projects that are just holding US treasuries or things like that, if the interest rate changes, yield could reduce drastically. So they could be in a very different situation in a year's. I mean, no one knows where how the whole global economy would look in a year's time, but I don't see inflation going away anywhere in most of the countries around the world. And so it's going to be very interesting how it all plays out with the, like, yeah, I mean, with their return as well. So, like, I'm thinking, what can people do with the liquid yield products, or how, or where can people use this token? And yeah, how does that work?
Yeah. So in general, I think the easiest thing you can do is just hold it and basically earn the standard yield that it provides. But what makes stablecoins really useful is that they're integrated into exchanges, consumer apps, payment cards, gambling platforms. I like NFL and sports betting, so I use
Yes.
stablecoins on several gambling platforms all across DeFi, so lending markets, liquidity pools, and I think with the case of liquid yield tokens, they've made a lot of traction in DeFi, but they haven't made nearly as much traction in CeFi. And with my
Yes.
background at Woo at the centralized exchange, WooX, I'm really focused on the perp trading collateral use case. So instead of posting USDC or Tether on the
Hmm.
exchange and using that as collateral, I really like the idea of being able to post collateral or basically trade using Sierra or other liquid yield tokens, where instead of paying 10% funding rate per year on average, maybe your total costs are like 5% or less because your collateral is actually earning yield for you, which offsets some of the funding costs. So because Sierra isn't quite live yet, we haven't really announced a bunch of partnerships, but I would say in general, we will start with DeFi and our
Yes.
goal is to expand a lot into CeFi. And I would just say, I think besides the different yield sources and reserve management strategy for Sierra, focusing a lot on token utility and being able to really use the Sierra token in CeFi and DeFi is a really high priority for us.
How do you get across the whole cold start problem? Like, of course, you want more adoption. The more adoption that is, it's better for the, I mean, for Sierra as well as for its holders. Back in the days in the web tool, you used to have the chicken and egg problem in marketplaces. You
Absolutely.
you want the buyers and the on the platform, but then buyers are not there because sellers are not there, and then the sellers are not there because the buyers are not there. It's kind of like a similar problem. You want the users as well as the holders. And so yeah, how do you overcome the cold start problem for a project like Sierra?
Yeah, great question. And it's definitely not an easy thing to solve. On one hand, DeFi is exciting because it's permissionless. So we can just go ahead and launch a liquidity pool. We can go ahead and create what's called an OFT with layer zero and bridge Sierra to new blockchains. We can create markets on Pendle. And then we can work with partners like curators, lending markets to have even more utility in DeFi. So I think the permissionless of DeFi makes the first part of the cold start problem a bit easier. But the
Indeed.
other thing I would say is incentives through our upcoming points program and
Yeah.
basically encouraging users to try out the product because of the intrinsic yield or the base yield, as well as the opportunity to earn additional points and incentives through our points program. I think using that type of mechanism has been quite successful in bootstrapping adoption with a lot of other peers within the liquid yield token
Absolutely.
space, but even more generally with decentralized exchanges, lending markets, all of those kind of applications. And so, yeah, I think the exciting unlock will be announcing our points program and then coordinating with a lot of partners in CeFi and DeFi to help their users earn points through
Yeah.
using Sierra.
Yep. How else do you differentiate in this space? Because I'm sure there will be only more liquid yield tokens launching in the whole stablecoin space. And it feels like there are so many new stablecoin projects now, and there'll be only more in the next few months or next 3 to 6 months?
Yeah, that's a great question. I totally agree with that. I think there's a few differentiating factors. A really simple but important one is transparency and operating with integrity and professionalism. Since at the end of the day, users' funds are at risk holding these different assets. So
Yeah.
instilling trust in users through the product is, I think, is very important. As I mentioned a bit earlier, Sierra is the only liquid yield token that has the full flexibility to utilize different yield sources as part of its reserve management strategy. So instead of only doing basis or only doing over collateralized lending, we can do everything. And we can incorporate some interesting ones like Pendle PTs, market making vaults. Your viewers may have heard of Hyperliquid's HLP, for example. So there's tons of innovative yield sources out there. And I think differentiating by being able to quickly add new ones as well as rebalance on a daily basis in response to market conditions is also a important one. And then what we spoke about just before this with utility. So really finding ways to partner with platforms and applications that have users that currently rely on stable coins that don't have yield. I think that's a big unlock because if you can do everything you can do with a stable coin, but then layer in meaningful yield, I think that's a big unlock as well.
Yeah, absolutely. I agree that yield is going to unlock a lot more things, because the thing is, right now, for most of the stablecoin use, you take the top 2 3 projects and stablecoins, and that makes most of the market cap of the stablecoins. The users are not getting any yield in return. So I do feel like that is going to be like the biggest change that is going to hit the stablecoin market over the next year. And either the incumbents will have to follow trend and launch some products to address that issue, or they will be replaced in future. That's how I see it, and that has happened so many times. It's like, Hyperliquid was nowhere 2 years ago, and now everyone knows Hyperliquid. It's kind of like one of the top 10 projects in the DeFi world. So what are some other trends you are seeing in DeFi currently?
I think some new blockchains that are more geared towards DeFi or stable coins. So we have the Plasma launch that's just about to happen. I think that's quite exciting. Some more, I would say, applications that are starting to compete directly with each other. So we're recording this on September 23rd, and
Yes.
there's a huge battle amongst Hyperliquid and Aster now, and even some of the other perp dexes like Paradex. And so I think that trend is really interesting. I would say the kind of cycling of capital across multiple DeFi applications. So
Yes.
you have Athena's USDE or SUSDE going into Pendle. And then from Pendle, you're creating the PTs, which are then being deployed into Aave and enabling users to loop those and earn extra yield through leverage. So I think the composability of DeFi is really starting to grow a lot. Maybe just the last thing I would say is there's a lot more professional investors, funds, or even maybe you could say prosumer kind of like individuals who have been around since 2021, 2020 yield farming, and they understand how things work. They know how to use their capital efficiently. And so, yeah, you're seeing capital formation across all of these projects and applications happen much more efficiently than it did a couple years ago.
Oh, absolutely. I do see some of the DeFi projects going so fast now compared to before, especially if they have the right product market fit. It is
Mhm.
taking a lot less time now compared to a few years ago.
Yeah. Actually, one more thing that just came to mind is an appreciation for the token by a lot of these projects. So before they would just give it away, they didn't care about the token. I mean, an example you could say is Uniswap with the lack of a fee switch for so long.
Yes.
Whereas now you have projects like Hyperliquid and others, which are buying back their token, returning revenue to token holders. And that value accrual, I think, is really important. And it's something that really didn't exist maybe even a year ago. And it's something that will probably grow a lot more over the next couple years as well.
That is so true because there was a problem of most of the projects doing that sort of a thing of airdrop, whatever, and not really caring about their token as much initially just to get adoption. And then
Yep.
people would just use it till that point, and then all those token holders would just exit as soon as they can. And the project will go up and down. And every project was following the same trajectory, but now it is changing because there's something had to be done about that, and it feels like the whole market conditions are addressing that. Do you feel like there's a misconception that people still hold about DeFi yields that you wish you can erase?
Sorry, did you say DeFi yields?
Yeah, or just in DeFi in general.
I would say maybe people think it's more like Yam Finance or Iron Bank, or was it Titan, the one that Mark Cuban got rugged on? Basically, like the last cycle of DeFi, even up to like Anchor and Terra Luna, it was very like the Wild West. I mean, you also had projects getting hacked for tens of millions, if not hundreds of millions. You had projects rugging, you had depegging, you had all kinds of stuff. And now I think the DeFi industry is a lot more mature. It's a lot more professionalized. I would say even some of these applications are institutional grade. Like the trading experience on Hyperliquid is remarkable. It's pretty much the same or better than centralized exchanges, which are often better than retail investing platforms in TradFi. Like it
Absolutely.
sucks logging into a bank and using their product after using things like Hyperliquid. And I saw recently like Aave would be something like the top 35 or so largest bank in the world by total deposits. And it's governed simply by smart contracts that were written a few years ago in the case of V3. So yeah, I just think people don't realize how far DeFi's come. And I think there's still a gap between what TradFi thinks of DeFi and what DeFi can actually do. So
Yes.
I expect in the next 24 months or even 12 months, you'll start to see a lot more of that. I mean, one simple example is the DeFi mullet that you may have heard about with Coinbase and Morpho, where users who want loans against their Bitcoin on Coinbase, the exchange,
Yeah.
are getting the USDC as a loan through Morpho, but they don't even realize that they're using Morpho because Coinbase abstracts from that. And so
Yes.
I think that's just the tip of the iceberg of what you'll see in terms of DeFi becoming even more institutionalized in the next couple of years.
Oh, absolutely. And if you had to bet on one use case of DeFi that will be still be relevant in say like in 10 years time, which is really hard to think of in our industry because our industry ages in like dog years. Like just like earlier you were saying, like the
Yeah.
Bybit hack happened. It feels like a year and a half, 2 years ago. It nearly feels like that, but it's been only like few months. So just our industry moves so fast. So it's very hard to predict anything beyond 2 years. But if you had to bet on one use case of DeFi that still will be there in 10 years, what would that use case be?
I mean, I think the two that come to mind, the simplest one is probably stable coins and tokenization and having a digital representation on a blockchain of some form of a real world asset. I think
Yes.
that is only going to expand. You don't hear about these permissioned blockchains anymore, these private blockchains. A lot of banks and other institutions, asset managers, they're all tokenizing on Ethereum or on Solana or on an L2. And so yeah, tokenization and particularly stable coins, digital dollars, I think are here to stay and will only get bigger.
Yes.
And secondly, I think lending just seems very kind of standard now. There's so
Yeah.
many quality lending protocols. I mean, Aave's the blue standard or the blue chip or gold
Yes.
standard, but you have Morpho, Euler, you have Camino on Solana.
Yeah.
You just have a plethora of different quality platforms that they work well, they can be relied upon. The code is very battle tested, and I would imagine 10 years from now, people are still borrowing against their assets on chain using lending markets, and the amount of stable coins in circulations is probably 10x what it is right now.
Oh, 100% agree. And I feel like a lot of these things will be abstracted away by institutions or CeFi players, and that underlying, whether it's a lending protocol, like how you were saying with what has happened with Morpho or other similar thing, that's what we will see in the next few years because it is very hard for someone who is not from crypto, like from a completely different world, to understand everything that is going on. And we cannot expect them to learn and all those new terms and new things. So I feel like a lot of these things will be abstracted away. But I completely agree. Like the stablecoin circulation will be 10x of what we have today easily. It has already grown to 300 billion and in a not that longer period of time. So yeah, it will continue to go that way. Where do you see Sierra? How do you see that growing? Will you continue to have it as a liquid yield token and be a player in stablecoin space, or do you see it evolving into like a broader ecosystem?
I think the focus will be singularly on Sierra as a product, so the liquid yield token itself, and really more around integrations, partnerships, focusing on token utility. So in an ideal world, every custodian supports Sierra. You can hold it however you want. If you want to hold it on your own wallet, that for sure works. But if you want to use more professional custodial solution, I think that should be possible. Payment
Yeah.
cards, if you like to spend crypto, I'm a big believer in payment cards and spending crypto, but I think
Yes.
spending your Bitcoin is a nightmare from a tax point of view, and no one really wants to sell their Bitcoin
No,
or
no one
buy.
would. No one spends deflationary asset. Like
Yeah.
that just doesn't happen because you become the laughing stock of the world that you bought pizza for $10 million. So no one does that because you just hold it and it will be worth something more later. So
Yeah.
people don't like spending it. It hurts, especially if you are someone who has been in Bitcoin for a while. You want to spend stablecoin because you know if it's back to USD, it's going to be worth less. So you should spend it. So it's great for an economy to have a very small amount of inflation so the economy keeps moving, otherwise people stop spending. So yeah, that you're 100% right. No one is gonna I don't see people spending Bitcoin, but I do see people spending stable coins, and that's what does happen already. So
But I think if you're holding stable coins while you're waiting to spend them, you're foregoing the interest.
right.
So yeah, I think one of the core use cases that when we were thinking about Sierra early on is you hold Sierra or another liquid yield token, you earn anywhere from maybe 4 to 10%, and then you can spend it anywhere that Visa or MasterCard is accepted through a payments
Yes.
card. And now that user experience, I want to be very clear here. It's not insured the way a normal bank deposit would be, but
Yes.
it's a better user experience than a bank in a lot of
Yeah.
ways because the banks pay you almost nothing and your credit cards are accepted in all the same places, but now you have much higher yield.
Absolutely.
So yeah, I see that as a core use case. But yeah, coming back to your previous question, I think the focus is solely on Sierra as a product and really growing that product and
Yeah.
making it more useful, adding new yield sources in, distributing it to different parts of the world, especially parts of the world where they don't have access to more traditional financial products. So, yeah, I think that focus on user experience, utility, and product design is where I see the future of Sierra.
Fantastic. And what's on your roadmap for the next 6 to 12 months?
Yeah, so we launch in a couple weeks. We've passed audit. We're doing internal testing, and then the public launch will be in about a month or so, hopefully by the end of October. And then, as I mentioned, we'll have the points program announced. We'll start announcing a series of partnerships and integrations where you can use Sierra, you can borrow against it, you can post it as collateral, you can spend it, you can store it, for example, with custodians. That will happen over the next 6 months onwards. And a little alpha leak or treat for your listener, Sam. The governance token of Sierra, which
Yeah.
is what the points will convert to at an airdrop, will happen no later than the end of Q2 of next year. So the end
Yeah.
of June. And so that's a little more than 6 months, a little less than a year. And I think for the rest of 2026 after that is really focused on decentralizing the governance of Sierra. Another big differentiator that's really exciting for me is having a really big community of holders of both Sierra and the governance token who are working together to shape the product, to change the reserve management strategy, add in new yield sources, create new partnerships and integrations, and really just contribute to the project overall. I think it wouldn't be successful just with the liquid yield token on its own. I think having that meaningful amount of governance and community participation and ownership is a really high priority for us. And also, I think a big differentiator if we can do it.
Fantastic. And in order to achieve this, do you have a ask? Are you looking for more partnerships? Are you looking at hiring? Are you looking at fundraising, like standard, venture style fundraising or anything else? Feel free to share.
Yeah. Thanks, Sam. I appreciate the opportunity. I would say a bit of everything. So, from a user point of view, everything from retail to institutional, would love for you to try out the product once it goes live. If you're an institutional client interested in participating in minting and redeeming, we could onboard you for that. If you're anything from a DeFi app to a consumer app to a centralized exchange or fintech, want to explore integrations, partnerships, listings, things of that nature. In terms of investment, what I'm really excited about as well is that we don't have any external investors presently. It's been bootstrapped so far.
Amazing.
And we will have the opportunity for all investors to participate at what I think are really reasonable terms and one unified set of terms for all investors. So you don't have the discrepancy where really early seed investors got in at a cent and now retail buys in at $2, and it's just a really unfair dynamic. So yeah, I'm really excited when we can get to the point of doing effectively like an ICO on platforms like Echo and Legion, where retail can participate in early stage investing like professional investors can as well.
Oh, that's fantastic. So, what I'm going to do is I'll leave links to everything that you guys are doing. And so people can find out more and participate however they wish to. So I'll put the links in the show notes, description, or comments because it's going to go on 14, 15 plus different platforms. So thank you, Mitchell, so much for your time. It's been an absolute pleasure talking with you. And I want to wish you best of luck. And I'll see you at Token in a week's time.
Yes, looking forward to seeing you in Singapore. Thanks for the opportunity to speak. As you said, check us out in the show notes and
Yes.
also just look at Sierra is Money on Twitter or Sierra.money is our website. You can see our docs, our blogs, everything like that. And yeah, I really appreciate the time to chat with you, Sam, and I hope to be back soon.
Yeah, awesome. We definitely have to do this again in Q2 of next year and see how far Sierra has come and how things have changed and matured over the years. So thank you, Mitchell, for your time. Thank you so much for tuning in and listening or watching this episode of the Web3 with Sam Kamani podcast. By now, you know the drill. Leave a comment or share this episode with a friend and leave a review. I would love to hear from you. So that's why my DMs are open. Reach out to me, especially if you are a founder building a product in Web3. Then I would love to hear from you. What are your challenges? Is there anything that I can help you or my community can help you with? Thank you once again and wish you best of luck in building your startup or your project.